Hi, this is Anthony. Welcome back to my show. I'm just warning you, on the last trading day of 2022, I finally bit the bullet and got rid of all of my ARC funds and contributed some more money to my Roth IRA and bought some securities that I'd never owned. And it always seems that no matter who it is, me, you, other more famous YouTube financial gurus, when somebody buys shares in a company, the price always seems to then immediately go down. Conversely, if you sell something, all of a sudden the price on those sold shares starts going up after you've exited the position. Time will tell if that's going to be true for what I just did. Actually, I've kind of lucked out so far, and what I bought has gone up over the last few days. But of course, 2.5 days don't mark a trend. But I thought that there may be a chance that we are finally kind of bottoming out or have hit the bottom and started rebounding on broad-based indices. I bought one share of the Dow Jones Industrial Average ETF, which is traded as DIA, one share of the SP 500, which has a ticker symbol of SPY, and 2 shares of the NASDAQ 100 ETF, which trades under the ticker symbol QQQM. It does the same thing as the triple Q, but is a lower price version and has a slightly lower expense ratio. I also bought 3 shares of what I consider to be an extremely boring company, that being the Church & Dwight Company, which sounds like a made-up name perhaps from the TV show The Office, but it's a real company. So why do I call this company a boring company? What do they even do? Well, despite probably not having heard of the stock, you've probably heard of the products that it produces. They're best known for Arm & Hammer baking soda. What company is more boring than a company that makes baking soda? They also own Trojan and OxyClean and First Response. They make air fresheners, pregnancy tests, and oral hygiene products. So on the face of it, why do I think a company like this would be a good component in a long-term, well-diversified portfolio? They make AIM toothpaste. Are people going to brush their teeth less if there is a recession this year? No. They make deodorant. Are people going to use less deodorant or other personal hygiene products if the economy goes down, or if inflation goes up, or if they lose their job? Probably not appreciably. And are people going to use less baking soda if the economy tanks? Probably not. In fact, with more people at home, they may be baking even more. So just because the company makes products that are recession-proof and not really dependent or impacted by economic issues, it doesn't necessarily mean that the stock will do well, because of course management could still screw up a good thing. So how is the stock done? Here's a chart of it over the past year. As you can see, it's down about 19.5%, which in the bull-like correction that we're currently in isn't too bad, and certainly not as bad as many individual stocks that I own, and I know that you probably own yourself. Let's take a look at the 5-year chart. In 5 years, you'd be up almost 64%. Very roughly, that's about a 12.8% annual gain. And of course, you have to remember that the dividend yield currently is 1.28%. On a 10-year basis, looking at information from various sources on the internet, it looks like your average return would be 12.99%. Looks like the total return over 10 years plus the dividends would have been about 229.42% to about 340%, depending on exactly which time frame, since the stock has gone down a little bit recently. Again, past performance is no guarantee of future performance, especially if management decides to mess around with successful formulas. Let's take a look at the longer-term chart. This one goes back to January 1983. Now, obviously, there must have been a number of splits in the history of this company, but those splits are factored into this chart. That's why the price shows up as 33 cents back in January 1983. But the point is, if you could have bought 33 cents of the stock at that time and held on for 40 years, your 33-cent investment would be worth a little over $82. Another way of looking at it, if you bought the equivalent of 3 shares back then, which would have cost you a total of $1 roughly, then that $1 investment would be worth $246 today. And you would have made dividends along the way, which are not factored into the market price. And by the way, over 40 years, that would have been a 24,754% return. And here's the 10-year chart that shows the relationship in growth between Church & Dwight and the Dow Jones Industrial Average. So I'm not recommending this or any of the other things I've talked about. No, not at all. Because I'm not a financial advisor, and this is not financial advice, just entertainment on YouTube. So I don't recommend people buying or selling anything. I do recommend that people educate themselves and do their own research for multiple sources of good information, not just listening to what you happen to find on the internet or especially YouTube. I do a lot of videos on penny stocks, and while you can make good rates of returns with some of those when the markets go up, usually they're in a beaten down range for a reason. For every Amazon that gets beaten down to $6 a share after the internet bubble collapses, there are 1,000 high-tech companies that went bankrupt and their shares went to zero. And so while I don't even like to recommend that people sell their penny stocks that they have, I strongly encourage them to consider that they take a course of action before the price goes down even further. That being said, when you consider how Church & Dwight has done in the past, looking at the fairly recession-proof products that it produces, and also looking at their financials, which look pretty good, this is the type of stock that one could perhaps buy and leave in their portfolio and not have to pay much attention to for a very long time. And just for full disclosure, I'm not shorting shares in anything, and what I've talked about in this video is a small percentage of my total portfolio. Currently, the majority of my shares that I own are in Amazon, Tesla, and PLTR. Obviously, I think that those are companies that are worthwhile to consider holding, but these are not recommendations. Again, do your own research. Okay, that's all I want to say for today. I would really appreciate it if you subscribe to this channel. It doesn't cost you anything, and it just takes 1 second to click that button. I would love it if you leave a comment. Do you own any shares in Church & Dwight? If so, how long have you held them? If you like this type of content or any of the other content that I've made, I would be humbled if you click the like button on those videos. Thank you very much for watching, and good luck in investing.